BlackRock just moved $2.1 trillion out of America. Yes, you heard that right. $2.1 trillion. It's a move so massive, it's sending shockwaves across global markets. The world's largest asset manager, handling more money than most countries' GDP, just shifted its focus. And if you're an investor, this could change everything about how you approach your portfolio. But here's the thing, everyone's talking about money leaving America. No one's asking the real question, where is it going? This isn't just about BlackRock pulling the plug on U.S. assets. There's a bigger picture here, and it could be a massive opportunity if you know what's really going on. Stick with me, and I'll show you how BlackRock's moves could unlock one of the biggest wealth transfer opportunities in decades. Don't blink. This might be the most important investment shift you'll hear about this year. So let's break this down. The headlines are everywhere. BlackRock pulls $2.1 trillion out of America. It sounds like a disaster, right? The largest asset manager in the world packing its bags and leaving. But here's the catch. This isn't an isolated move. This is part of a larger pattern, and it's happening for a reason. Let me ask you something. Have you ever wondered why such a massive player is making this shift now? Could it be that they're seeing something coming, something we aren't? Because here's the key detail no one's talking about. This isn't just about money leaving the U.S. It's about the global reshuffling that's already underway. And if you're not paying attention, it's not just BlackRock who stands to profit. You could too, but only if you know where to look. Here's the truth most aren't telling you. BlackRock didn't just flee the U.S. in a panic. No, what they did was much more strategic. They didn't completely pull their money out of the U.S. Instead, they reduced their exposure to long-term U.S. Treasuries. Now, let's pause here. Why would they do this? Think about it. The U.S. has a national debt of $38 trillion. And with rising interest rates, long-term government bonds just aren't as safe as they once were. BlackRock isn't worried about the U.S. defaulting tomorrow. They're concerned about the math changing. And it's not just them. Foreign central banks are doing the same thing. They're reducing their exposure to U.S. debt at an alarming rate. Here's what's really happening. BlackRock is shifting its portfolio away from long-term risk. That's where the real opportunity is. The question is, are you ready to position yourself for what's next? Now, let's take this a step further. When BlackRock moves like this, it's not just about one decision. This is part of a larger trend that's been unfolding for months, and it's escalating fast. Think back to the 2008 financial crisis. When the global markets collapsed, institutions acted quickly to protect themselves. Now, we're seeing a different kind of crisis unfold. The U.S. economy, while still strong, is showing signs of strain. And what's shocking is that this shift from long-term U.S. debt isn't just about BlackRock. It's part of a bigger global pattern. Countries and institutions are getting nervous about the U.S.'s ability to manage its debt long-term. This is becoming normalized. Big investors like BlackRock are adjusting, preparing for what's coming next. And this is what should worry you. What's becoming normal today, shifting assets away from U.S. debt, could be just the tip of the iceberg. The next wave could hit faster than you think. Now, let's take this even further. BlackRock didn't stop at just shifting their exposure to U.S. Treasuries. They diversified globally. They're not running from America. They're repositioning their investments to capitalize on emerging global trends. They've been investing heavily in Asia. Think about the massive AI infrastructure boom happening there. But here's the kicker. BlackRock's portfolio is still heavily invested in U.S. equities, especially companies linked to AI. If they were truly abandoning America, would they be so overweight on U.S. stocks? Of course not. So what's the big picture here? BlackRock sees opportunity in the global AI revolution and knows the dollar's weakening is a chance to spread their risk and reap bigger rewards. And they're not the only ones. Other major players are quietly making similar moves, while most retail investors remain fixated on the wrong things. Here's why that's a game changer. BlackRock isn't running away from the U.S. They're adapting to a new reality, and understanding that shift could make you a lot more money than blindly following the crowd. But here's where things get even more interesting. This isn't just about BlackRock and its strategic moves. The global economy is shifting under our feet, and it's happening fast. Let's stack a few rapid developments to show you just how quickly this is escalating. First, the U.S. dollar just had its worst year since 2017, dropping nearly 10%. That's a huge shift. It means international stocks are suddenly more attractive to U.S. investors. Companies exporting U.S. goods are getting more competitive, and commodities like gold and silver are rising fast, but that's just the beginning. Second, BlackRock isn't the only one diversifying out of U.S. assets. Foreign central banks are offloading U.S. debt at an unprecedented rate. The question is, what happens when that trend accelerates? What happens when even more money flows out of U.S. government bonds, seeking safer, more profitable investments abroad? And finally, the AI boom is spreading globally, with Asia and Europe becoming key players in the future of technology. BlackRock is positioning itself to profit from that revolution, and they're not alone. The opportunity here is huge, if you know where to look. So what happens if this continues? If this global shift picks up steam? If the dollar weakens further and more money leaves U.S. Treasuries? We could be looking at a new economic order, and it's happening faster than you think. Now, let's zoom out for a second. You might be thinking, this sounds like a game for the big players. What does this have to do with me? But here's the thing. This global reshuffling could impact your money, too. When BlackRock makes these massive moves, they're not just protecting their billions, they're also signaling where the real wealth is moving. The average person might miss the signs, but if you're paying attention, you can position yourself for the same opportunities. Consider this. While institutional investors are shifting their focus to global markets, international stocks are getting cheaper, especially with the weakening dollar. That could mean bigger returns for everyday investors who know where to look. But here's the catch. This opportunity isn't going to last forever. The window is small, and only those who act fast will benefit. And that's the challenge, right? Most people are still chasing the same old U.S. stocks while the rest of the world moves forward. But if you're thinking bigger, you could tap into the global wave that's already gaining momentum. If this feels familiar, like you've seen these shifts before, let me know in the comments. Are you ready to take advantage of the opportunities unfolding right now? Now, let's step back and look at the bigger picture. This isn't just about BlackRock's strategy or the dollar's decline. This is about the system that makes all of this possible and the mechanisms that allow these massive shifts to happen. Institutions like BlackRock have access to data, analysis, and leverage that the average investor will never see. They're able to move money at a scale and speed that most of us can't even comprehend. But here's the unsettling truth. The same systems that allow BlackRock to profit from global shifts are the same ones that make it harder for everyday people to get ahead. The power lies in where the money flows. BlackRock isn't just reacting to the market, they're shaping it. By moving $2.1 trillion and investing heavily in AI infrastructure, they're betting on the future of global technology, while simultaneously moving away from the U.S. government's debt. This strategy creates an imbalance. The big players have the advantage. The question is, how long will it take for the rest of the world to catch on? How many people will miss these signs and end up falling behind while the wealthy position themselves for massive gains? The system is built to reward the well-connected, and if you're not part of that system, you're playing catch-up. But here's the twist. Understanding this system doesn't just leave you at the mercy of the market, it gives you the tools to navigate it. You can act like the big players. You just need the right information. So what happens next? We're on the edge of a major economic shift, and two paths are unfolding before us. On one hand, we could see a continued weakening of the dollar, further international diversification, and a global economic boom, especially in sectors like AI and emerging markets. If that happens, those who position themselves wisely in international stocks, precious metals, and tech infrastructure could see significant returns. The trend would continue, and the shift away from U.S. Treasuries could drive even more capital into assets that are growing globally. On the other hand, if the U.S. dollar stabilizes, or if we see a sudden surge in U.S. tech stocks and defensive assets, the global shift could slow down. U.S. markets might hold steady, even as other countries struggle to adjust to their own economic challenges. In this scenario, investing in U.S. tech companies like Amazon, Microsoft, and Google, those using AI to drive future profits, could be the smartest play. What's clear is that the momentum is building. The next move is already in the works. But which direction it goes in is anyone's guess. The real question is, how are you going to position yourself for what's next? So here's the big takeaway. We're witnessing one of the largest wealth transfers in modern history, and it's unfolding in real time. But this isn't about panic. It's about understanding the shifts and positioning yourself to profit. BlackRock's move isn't about abandoning America. It's about adapting to the changing global landscape. And if you're paying attention, this could be your chance to ride the wave instead of getting left behind. But there's one thing you need to remember. The true opportunity lies in being strategic, not emotional. If you're ready to make smarter moves in your portfolio, this is just the beginning. The wealth transfer is already underway, and now's the time to act. If you want more insights like this, don't miss the next analysis. Click follow and subscribe, because in the world of investments, it's the ones who know what's coming next who win.